All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Friday, January 24th. We concluded another week. We've got about one more week to the end of the month, and we saw some volatility pick up. Once again, it appears, on these Fridays, I was hoping that we would kind of break the streak. What I've been calling them is dud Fridays. They just seem to be that something seems to be going on going into the weekend. Last weekend, we were going into a 3-day weekend, which is quite normal for traders and investors to kind of take down some risk ahead of a long weekend. There's more chance that something can go could happen negatively versus positively. I think the last couple weeks before that, we had global tensions with Iran and some other things going on. So that was kind of an excuse to take off risk. And today, we heard obviously reports of more of the virus, the coronavirus, spreading around globally, and in the United States, we heard rumors and some confirmed cases of that as well. So that kind of just led to risk off across the board. You could see the VIX was up. We really haven't seen the VIX get above 15 for a while, and we got to 1420. Interesting because we have seen some VIX positioning in calls. It's almost like the boy that cried wolf, right? We see that from time to time. There will be some VIX call positioning, and a lot of times it doesn't work, right? We see that nothing happens, but whoever's doing it probably got this one right. Considering we've seen a move in the VIX from about a 12 to today we got just under 16. We did close, I think, just around 1450, but at one point, the VIX was moving, about, a half a point every few minutes at one point midday today, when those more reports were being, where we saw more headlines come out. But again, we didn't close on the highs. Could we get, above this line and go a little bit higher? Sure, we could. But yeah, we basically started the day below 13, so that's a decent intraday move, probably up about 15-16% if my math is correct at one point. So we'll see how this develops. Again, whoever was doing that positioning was right. You could also see on the bottom left of my screen market breadth. That was something that we were monitoring today, because it did get it kind of trailed off. It got worse and worse. The worst it got was around 2 o'clock. We did see, some sort of buyers or short covers kind of come in at the end of the day, because you could see market breadth got a little bit better. But so what does this mean, kind of going into the weekend? Well, let's look at performance first. We'll just do a little bit more of a round trip on performance, and then I'll talk about the weekly performance. But I'll give you my feel going into the weekend. Clearly, just looking around at these sectors, gold miners performed best. Utilities also did okay today. Defense and aerospace, Boeing had some. There's like almost every day with Boeing with a headline. It's crazy the way it's bad, it's good, it's bad, it's good. Just back and forth. We have a couple traders in the room who are doing an excellent job at trading the headlines, but you got to really be quick and be on your toes, and then move to the next headline. I guess that happens in that space. And then on the flip side, a couple things that stood out to me this week was biotechs. I didn't realize that. I guess the move earlier in the week, was kind of ignited by political stuff, right? With the Democratic Party. Bernie Sanders, I guess, moving up in the polls. I don't know. I kind of just feel maybe it's an excuse to take off some risk too. That's a decent break. I've been talking about biotech, just didn't look right this week. So big move there. XLV looks a little bit better at the top of value, but it's another group basically. Bottom line, it's another group that's breaking down. I talked about JP Morgan earlier in the week. Thinkorswim is being very consistent by doing this. It seems to do that a few times. But look at J.P. Morgan. J.P. Morgan started to lean that way on Thursday, and Yesterday was pretty tricky because buyers kind of came back into the market. I think a lot of that had to do with the World Health Organization coming out and not declaring this a full-blown emergency. So maybe that comforted investors enough to really like not dump risk. But J.P. Morgan, remember, had great earnings and has been moving down. So again, what this tells me is that market breadth. A couple of weeks ago, we saw basically just about every sector start to move, to the upside, and there was really, really strong breadth. The advanced decline line was breaking out. Now we're seeing it kind of come in the other way, right? We started to see that, of course, with energy, which is the worst of the worst. By the way, this XOP ETF, which is equally, which is basically all companies within the sector, equally weighted, so small caps and large caps in there, oil and gas name. This was down 10% in 5 days, 5 trading days. So pretty remarkable. And back to the lows. So, a week ago, I talked about being careful with, I saw a lot of traders on Twitter playing high short interest names. And yeah, believe it or not, sometimes that does kind of mark the end of I don't want to say the end of a rally, but maybe the end of a swing. When you start to see those crazy momentum names that are like really, I call them bottom of the barrel names, like the pot stocks. When you start to see people going nuts over the pot stocks, I didn't participate in this move up because they come down just as fast, and especially names in downtrends. I talked about how being a trend trader helps me kind of stay out of the junk. Because again, I think it's much harder for a name to reverse out of a trend. Now, bounce is one thing, but you could see, CGC was down, almost 8% today. So again, if you're playing them for a bounce and you know that that's what you're doing, and you're really quick to kind of get to that exit, then that's one thing. But I just get worried personally when I see a lot of people tweeting about these names that have been in downtrends for a long time and getting everybody excited, because I know not everybody can get out as fast as the guys on Twitter making the recommendations. It's just not how it works, right? Not everybody is that smart to say, okay, it was a quick pop, I'll take profits and I'll get out. Some people get in this, and especially the way that it gets put across on Twitter, like, hey, these are going to be the next big things, pot stocks, right? That people got sucked into these, and so I don't like to play that game. I don't really like to. Again, counter trend trading for me is about 10 to 15% of what I do, and that's it, because it just, more often than not, this happens. It just gives it all back and returns back to the downtrend. Now again, I don't know what's going to happen with these. Maybe these hold the support. This is the MJ ETF, but it's really, if I were to play this group or a trend like this, it's usually pretty small in terms of what I'm overall positioning in. All right, so that's the performance there. Just interesting how some of the worst names, they get hit and they go back to where they were. So that's the performance. Again, you could see a lot of red. Overall, you could see that small caps finished down 1.6. Those were the ones. They interesting. They really did a round trip. Small cap futures were leading the S&P this morning. They were up about 45 basis points going into the open, and they gave them back pretty quick. And for the day, small caps finished down 1.3%. So again, hard risk off there. Bonds as well, that should be highlighted probably in green. They had a nice move. We talked about them. I got a trade to work in the TLT, breaking out of that. So that worked. Gave one false move back here, which I was a little bit worried about, but ducked back into value and then went. So sometimes we see that. So my thoughts, I'll tell you a little bit how I traded today as well. I stunk it up today. I kind of got caught trying to look for some things that, look like they might go today, like the software names, and that was a little bit unfortunate because I chased a little bit of green in plan today, and then of course got greedy and didn't take any targets. This, and again, this wasn't a huge position for me, but this thing actually ended up fine today. But I just decided to take it off. Twilio was another name that I got into yesterday. Started to work the right way. I ended up going back into this. My stop was 120. And guys, like this happens sometimes in trading. It's unfortunate. You get stopped out on it, but you could always get right back into it. If you get sucked into a false move, and I don't know what this name's going to do next week, but my stop is 120. If I end up getting chopped up again in it, so be it. But it's an important lesson to learn that if you get stopped out in a name, sometimes you're disgusted. You're like, I blew it on this trade. You try to be unemotional, and if it happens to trigger again for you, you can get back into it. You got to sometimes take the emotion out of it. Besides that, I got Starbucks, which was a trade that I put on at the end of the day yesterday. Clearly, with the virus spreading, they're talking about closing Starbucks stores in China. I mean, that's not good, and it's not good for a lot of retail, right? As people are just not going to shop. They're just not going to go into public places. So, it's almost, I know it's completely different than a trade war, but there's things that kind of rhyme with this, right? The longer this goes on with the virus, and again, public safety is number one. I don't want to see, it's horrible to hear about this just from, a standpoint of getting people sick. But also you have to get down to the business too, and talk about what we're doing on a day-to-day basis. But if the longer this goes on, it's obviously it's bad for people. It's also it's bad for business too. So, and that was the situation with the trade war. Like that the longer that trade war went on, the more the damage is going to take place with that. So it's kind of has some things that rhyme in terms of that. And especially real effects, right? With Starbucks and McDonald's basically saying that they're going to have to, that they're going to close temporarily in some locations, right? So that goes right to the bottom line. So I think that's interesting. So yeah, I got chopped up in a few trades. And then what I decided to do, just when I saw market breadth as negative as it was today, I just decided to use it as an excuse just to take off some more trades. I did that with our tactical portfolio, right? That's outside, what I'm talking about with a couple of the other trades, Twilio, Starbucks, so forth. That's in my short-term account. I also have this longer-term account that I manage called the tactical portfolio. And I'm happy to show you the components now because I took half of them off. I just decided to take some profits. This has been a portfolio that's performed really well. I also took off last Friday, I took off things like Apple and Tesla, and went into about 10% cash. And I did that with the SHI ETF, so you could see 9%. I now bumped that up to about 30%. No, excuse me, 35%. Just because, so here's, just to kind of make sure that this video is going to the right place, because next week, so besides this, not just what's going on with this virus, that just adds another layer of uncertainty, but we've got a really big week next week. I've been saying, and I've said this so many times, I feel bad for repeating it again, but this type of back and forth price action, this usually happens on earnings season. Now, again, there's obviously something else going on, but it's very choppy around earnings season. I probably spent about 15 minutes talking about that in our member video. I think I've talked about it every day this week, just because I want to make sure that everybody knows that. I see that a lot on Twitter where people they're like, oh, geez, I really got chopped up today. And that's fine if you understand that this is the environment during earnings season, because it happens every quarter. Usually the indices, unless something really unusual is going on, the indices just don't move during earnings season. So the reason why I say this over and over is because you'd rather be prepared, So if you've heard me say it over and over, I apologize, but it just I when I still see people surprised at the price action, it makes me think that still people don't realize, traders don't realize that it's extremely choppy. So what the things that I've been saying to do are to trade less and to trade a smaller position size. If you feel compelled to continue to trade, and I've still been putting some trades on here and there, just trade with smaller. It's just not worth risking when you have that much new information coming out. But next week, I think it gets even more serious, right? The big hitters report. You got, now we're really into the heart of earnings season next week. Plus, you have FOMC next week, right? So this is just an excuse, I think, for me to move a bit more into cash. And I also did that in my short-term account. I just took off a lot of positions today. Now, you're probably thinking, oh, geez, well, that was not smart of him because he had to do this when the market was selling off. Now, one thing that I don't mind getting caught a little bit at the end. Now I'm not. Now we're still holding the 20-day moving average, but I don't mind doing this up here because I've been holding all the way through this swing, right? And I've said basically all along that I'm not going to try the top. I'm not going to time the top of the market. What I'm going to do is on the day that we sell off, that's probably where a day where I'm going to lose money, because I'm not going to pick the top and I'm not going to I don't call bottoms either. So it just is what it is. Am I happy about it today? Like, no, but it just is what it is. So that's my plan. I think there's no reason. Go back to this. There's no reason with this much stuff going on for me to press here, and I'm happy with the year that I've had. So the beginning of the year that we've had, and also the end of the year. Basically the last 4 months have been tremendous. So in my opinion, there's no need to press with a lot of new data coming out. I am concerned about what Powell is going to say on Wednesday. Is he going to put a timeline together for when they're going to stop pumping money into the system? We don't know that yet. Do I want to have a lot of risk on into that event? No, long or short. So now, if I miss a day of a rally, so be it. To me, it's just not. It's just not worth it. I think at this point, after how far we've come to. Plus, also, if he does come out and say that they're not ready to take the foot off the accelerator and the market ends up coming in a little bit more, it's going to create a nice buying opportunity. So that's the whole thing. I at this point also welcoming a dip into the market or some type of a check back. I think that will create so many opportunities. So to be a little bit more positive, yeah, and here's another one. Additional 15 coronavirus deaths. Wow. So, this thing isn't over by any means so far. So, and again, one of the things I said in the trading room as well towards the end of the day is, watch how you're positioning too. Like, there's no reason to have, like, in my opinion, again, this video is for information purposes only. I'm not giving out any recommendations. But if you're trading short-term options in here and we have all these headlines, you kind of have to think about what you're doing. Because that's just straight up, like, unless you're like, if you're okay with that risk, meaning the options can go to zero really quickly. As long as you're defining your position size, then it's a different story. But I know some traders have a tendency just to only trade options and just to only trade short-term options. So that's really risky, especially when you've got all this stuff going on and you don't know how this is going to. We just got cases reported in the U.S. So if this thing spreads, much worse in the short term. What's going to happen to those positions, right? So, that's just not a risk that I think is smart to take with that kind of unknown in front of you. Now, again, this may shake out in a week someone may have a vaccine and so forth, and then it will be confirmed that it's a buying opportunity. But I would rather much have a lot more cash on the sidelines until that takes place. So bottom line is we reduced risk, or I reduced risk very significantly in the tactical portfolio. I also did that in my short-term trading account, and I feel really comfortable about that going into the weekend. I just wanted to give you as well. I always like to review the week's performance. Again, pretty crazy that XOP down 10%, but I just wanted to show you there. Utilities had a big week. Home builders had a big week as well. Gold miners showed up today. Semiconductors also. Interesting, the performance for the week in the small caps really got hit, and emerging markets as well. Bonds and gold both rallied. All right, guys, that's it for the Friday video. Again, I'll put out my thoughts to members, which I hope that helped. I think I didn't have for the watch list that I put out. I had some China names, and they're going into the week, so I understand they all didn't perform well, but I think the message that I was trying to get out there was to really watch a risk into earnings season, and I hope that helps some traders this week. All right, guys, that's it. Have a great weekend, and you'll hear from me on Sunday with the weekend video. Thanks, guys.